Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. Honored to Rob here in just a few moments, but first we need to go over some important housekeeping details. Market gave us an oversold bounce, which will be interesting to see. Will it be like one and done like the last couple times, or maybe have some fall through days? So we'll be interested to find out. Unfortunately, it was an upside bounce. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. So for this session, we actually only have one method of asking questions, and that's going to be circled on the screen for you. That's the Q&A window. At any point throughout the session, please feel encouraged to write your question in through that window. We are live streaming on Facebook, YouTube, and Twitter, along with Zoom. So at the end, we are going to try to pass through as many questions as we can from the various different platforms, but the session is brief. After Rob gets through his presentation, he goes through some case study considerations, and then we open it up to a few questions at the end. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. With that, if we don't get to your question, take that as encouragement to attend the insiders meeting when there's a 45-minute session solely based on answering questions for our subscribers. So much higher of a likelihood of getting your question addressed in that session. We also have the chat window as well for any support related queries I can handle in there, or for any interaction amongst other attendees. Please feel encouraged to use that window and feature throughout the session. Just be sure to change the "to" at the bottom from host and panelist to everyone. That way everyone on the session will be able to see your message. I believe that covers off all the important details, so I will now get out of the way, introduce the man of the hour, and that is Rob Roy.
Hi, everybody. Welcome to this week's TradeFinder, and I piggyback on what Zach said. Welcome to everyone who is live streaming on all the various media platforms. And here I am. Hey, how you doing? Obviously back in the Dragon capsule. Interesting because SpaceX is doing about a launch a week. So we've been rattling windows every single week here in Florida near the Space Coast as they are sending all those Starlink satellites up into space. And was it Astra? Is it Astra? Which is another company that's trying to send satellites up that's been really struggling. Their last launch was successful, but the next stage didn't fire, and so they didn't get high enough in orbit to put their satellites in. And I think those were defense satellites, if I remember right. But we'll have internet. We may not have defense, but we'll have internet anyway. Maybe they ought to go with SpaceX. Who knows? They seem to be doing okay getting their rockets up into space. But give you an idea of how TradeFinder works. If this is your first TradeFinder, we'll talk about the markets, not just the US market, but international markets as well. Please hang in there if you're only interested in trading the US markets, because all of the securities that we look at pertaining to international markets are tradable in the US exchanges as well. And as you know, if you've been watching any of these, especially with Germany, Australia, et cetera, we've had some pretty darn good patterns that could be traded on the US exchanges. Then we'll go through and look at any closed case studies that we've done for our alert subscribers at EWOtrader.com. We'll review the case study considerations that we've looked at in past trade finders. We'll look for a new case study consideration for tonight as well. And with whatever time's left over, as Zach explained to you, we'll open it up to a live Q&A. We'll get to as many of your questions as we can in the allotted time. So that's it. We'll go ahead and get into the important stuff. Let me just make sure that you're seeing the appropriate screen here. And I think you are. So here's the market. And as Zach mentioned, we did have the bounce up today, but unfortunately it was a gap. So does that mean we're going to turn around and go right back down again tomorrow? We're going to get any follow through? In the past, when we've had these rally attempts, it's been a one and done and headed back down. So we'll see what that gap means. I would have liked to have seen maybe just start flat and then rally to the upside, but we did have a long holiday weekend, so there was some pent-up demand. And you can see that wave 5 is right at the 61.8% fib extension. We talked about that in the weekend update. Can we hold this here in this tap box? We have breached the top part of the tap box. It's still there though, so we could potentially go lower, but let's see how that plays out with that gap up. We've had a couple gap downs. Could we have a gap up and run? Well, that would just lead to the idea of any sort of a bounce is oversold, and we're probably coming back down to make new lows because we'll need to fill that gap down there. Remember that gap at 400 that lasted for so long? A lot of people never thought that would get filled. Well, it did. So we'll see when that one gets filled. High percentage chance, was it 94%, I think was the study that we did of gaps get filled. So not every gap gets filled, but pretty darn close. We still have these two gaps here that occurred to the downside a week ago Friday and a week ago Monday. So are we going to gap up and run fill those? Do we got to come back and fill this gap tomorrow? And then take a look at filling those before rolling over. Is the bottom in? Just doesn't feel like the bottom is in to me just yet, but I know that it's on the financial networks that a lot of the pundits are coming out and they're doing some nibbling. And I think that makes sense to do some nibbling on some really oversold stuff, some stuff that you want to hold long term. If we do go lower, are we going to go significantly lower? Not sure about that. Even if we do go lower and you get a better opportunity to add to some things, just putting on some small partial positions, nibbling here and there, as I said, it does make sense to me. So, we're going to have some more volatility, I think, as we move back and forth to the upside. And speaking of volatility, I don't have much else to say about the market. So we'll look at the VIX. You can see we haven't quite gotten back to the 10-day moving average yet. So we're still in the oversold category here. Just hate that darn gap. But look at the separation that's creating again from the 10 and the 50-day moving average. We closed it on this move, but we never touched the 50-day moving average. And now we're pretty separated again. So are we going to come back and touch the 50-day moving average this time on the bounce? Maybe, because the 50-day moving average is now lower. Really interesting right now. Kind of hard to figure out where we go for the next couple of days. It was pretty easy prior to this, but for now, we just got to wait and see how that gap plays in. So let's take a look at the gaps, multiple gaps, down and up. So let's just go ahead and look at the VIX, and then we'll come back. And I've talked about this, I don't know how many times. I've given you the analogy of boxer versus puncher, with the fact that we just keep hitting our head against 35. Never seen anything like this before. And I love that about the markets. And that's what gets you excited when you've been around as long as I have. I mentioned to some people towards the end of last week, and I've told you guys this before, I never say that I've seen everything because I've been around so long. You never say that, because as soon as you say that, the market's like, oh yeah, well, have you seen this? And it brings something new into the fold. So I don't ever say I've seen everything, but when you see things that haven't existed before, that's pretty exciting. And to see this much of heightened volatility consistently hitting a level but not breaking it is just mind-boggling to me, to constantly be hitting that 35. It's nuts. This goes back to at the end of the 90s in the old VIX, where the VIX range, and it's interesting that it's 35 because the old range was between 20 and 35 on the VIX back when it was on the OEX, the S&P 100, and we only did near month options. Now the VIX is calculated on the S&P 500, where you do near month options 1 month out, and you do at the money options, 1 strike in and 1 strike out of the money. All that's calculated into the new VIX. But in the old days, it would have been, okay, that's pretty normal. You go up and hit 35, you come back down. You go up and hit 35, you come back down. So it's just kind of interesting with the fact that it brings things back that occurred over 20 years ago, even with the new calculation on the VIX. So I don't think we're going to continue to play out that way. Note that we are making some higher lows here on the VIX. So we're starting to build an ascending triangle. Perhaps we play this out as we go through and fill those gaps I showed you on the SPY, and we build a really nice ascending triangle on the VIX, and then we get some sort of a significant break one way or another. As a reminder for those of you that are new, and again, those of you live streaming, an ascending triangle does not necessarily mean you get an upside breakout. I know there's a lot of marketing out there that says that. Data doesn't show that. The data shows that when you're in a ascending, symmetrical, or descending triangle, you're going to get a breakout. But an ascending triangle doesn't mean an upside breakout. A descending triangle doesn't mean a downside breakout. It's a toss of a coin regardless. So we could go either way. It just means that we're going to make a move. And so as we continue to build into this, perhaps we have a little less volatility over the next few days, or slightly heightened. Maybe we go down and fill that gap that we had today, and that keeps us in this heightened range. I don't know. The market's going to do what it's going to do. We're at a point now where we don't have a whole lot of alerts on for our alert subscribers. We closed some off. I'm going to show you some things that we did. But right now, there's times when it's best to pause and wait. And there's times when it's best to be really aggressive and go hard after the market. We're getting into one of those times where, we've hit a 61.8% extension. We had a gap up today. I would have said that, hey, the likelihood is that we're going to continue up and fill these gaps if we hadn't a gap today. But that changes everything. It just does. So just so interesting on the VIX. All right, so let's take a look at some of the other things that we always look at each and every week. As you know, we like to look at interest rates. So let's take a look at the TNX and look at the 10-year. And we came back down to the 10-day moving average. We talked about that over the weekend. As you know, we've only had one trading day since the weekend because of the holiday yesterday and the market being closed. A little bit of a move back up, nothing significant. So right now we came down, filled this gap right to the top of the wave 3 there, tested the 10-day moving average. Interest rates doing exactly what you would think. The expectation now would be a continued slow crawl higher. Note that the wave 4 is 23%, so that's the 23.6% fib level. Again, for those of you that are newer, Elliott didn't really count the 23.6% fib level as a corrective level. He noted the importance of it because it's a fib level, but he preferred to have a bona fide corrective move, a move down to 38.2%. So we're not there yet. We may not get there for a while. We could move all the way up here, all the way to this wave 5 target here before maybe we run into a little bit of stronger resistance. We are at the 38.2% fib extension on the wave 5. It was a vertical move. It was a gap up. If you've heard me, I don't like either one of those. I don't like the gaps. I don't like the vertical moves. What goes vertically up often comes vertically back down. It did, came vertically back down, filled the gap. All those rules that you hear me saying over and over and over again have played out perfectly on the TNX. All right, let's take a look at the dollar. And I've heard some wild forecasts over the last few days on where the dollar could go. And that's not good for international companies because of the exchange rate. It's good as far as being the currency of last resort, which we need with the amount of debt we're in. I've talked about this in the past, but I promise at some point in the future, we're going to do a session on the Federal Reserve. We'll do a whole thing, history of the Federal Reserve, how it works, all that kind of stuff. I think you'll find that really enlightening. So we'll do that at some point in time. We've just had so much on our plate of things that we've wanted to release for our subscribers, et cetera. And note that we're getting a little bit of a triangle here on the dollar, kind of a doji today. So you can see that it's not the most well-formed triangle, but there is a series of lower highs and higher lows, and that's a triangle. And especially with that doji today, is the dollar getting ready to move? Man, if the dollar breaks to the upside, that's just not going to be good for internationally based companies fighting inflation, fighting everything else that's going on. I like the strong dollar. I don't want to see it run all the way up there and hit that 108 plus level, but it could very easily do that just from the market in general. If you're long the market, that's not a positive thing. But if the dollar moves back to the upside, the one positive there is what can derail the dollar is economic weakness. And, there's all kinds of stuff. Are we going to get an official recession when we get the next GDP number? Or are we going to skirt it from the official reading and stay away from it? We'll wait and see. But economic weakness could derail the dollar. So if you're looking for some sort of positive in all this mess that's going on, it would be the fact that, yeah, the dollar had a move down here, but it just moved down from, again, a vertical move, a pretty strong move, came down, tested the 10-day moving average, closed back above it, or closed right on it on the day that it tested it, and closed above it the past 2 days. If you see that start to tank to the downside out of this triangle, well, then we're starting to look at that stagflation concern where we have not a good economy and high inflation. And that's a nightmare to get out of. I know the Federal Reserve doesn't want to have to deal with that. That's why they're trying to be aggressive now. Get inflation under control before they completely destroy the economy. And we have economic weakness and high inflation, that's stagflation. So kind of just wanted to show you that triangle formation there on the dollar. Looking at the diamonds, so we'll look at some of our other markets before we move into some of the international markets. Again, gap back to the upside, very similar. Doji there on last Friday, and then the gap back up. Still oversold here. Very, very similar chart to the SPY. So they're kind of in lockstep here. Again, the 61.8% fib extension on the wave 5. You kind of like the fact that the markets are a bit in line here. And so now let's look at the Qs, which will be a little bit different. We had that 118% wave 5 extension. That's kind of in no man's land. Are we going to come down to 138.2? Or are we going to 161.8? Too early to tell. We're getting a little bit of basing action here, right around 280. But look, the Qs did touch the top of the 10-day moving average. So are they going to lead us back down again because we've recovered that? Note that we were still oversold on the SPY and the diamonds. We're not technically, can you imagine that? We are not technically oversold on the Qs. That's amazing. We do have some separation here between the 10 and the 50-day moving average, but it's early, getting wide. I mean, we could bounce up and fill those gaps, but the point here, the fact that we did touch the 10-day moving average on the high today means that the Qs could roll over in tomorrow's trade or in the next couple of trading days. Tiny gap up today, not significant gap as we had on the SPY or the Qs. Let's look at the IWM. So we've taken a look at the small caps, and a doji here didn't gap up on the IWM, but look at the high. That isn't what we wanted. Right up to 170. Remember when we were talking in the weekend report of if we can't get back above 170, does 170 now become resistance? And we come down and hit this wave 5 target right smack in the middle of the tap box. For those of you that are new, if you're not familiar with Elliott wave, I'm not giving you an Elliott wave class here, but you're seeing all these patterns that are dead smack in Elliott wave patterns with the fib levels, etc. I don't know how you can argue against Elliott wave when you're looking at how accurate it's been on these patterns. So we're at a 38.2% fib extension on the wave 5 here, 61.8 on the SPY and the diamonds, but 38.2 here on the Russell, and the doji right there at 170. Tiny bit oversold, not significantly. Sure hope that that doji there doesn't mean a rollover and heading back down. But if it does, it probably means a new trading range for the IWM between 150 and 170. But if we can get back above 170, then we still have the chance of reforming this bit of a consolidation area where we were bouncing a little bit between 170 and 190. But that doji makes me a little bit nervous right there at the 170 level for those of you that are interested in trading the Russell. And I know a lot of you are because you ask about it all the time. Bitcoin, let's take a look at Bitcoin FX. And over the weekend, it looked like, oh, you know what was going to break loose. We got below 20,000, but we got right back above it. So again, look at how Elliott wave has nailed Bitcoin. I talked about this in the weekend report. If you're a Bitcoin trader and you're looking for an indicator that's been really accurate on it, Elliott wave is your guy. That's your indicator. So we held 20,000. That was important. But we are right smack in the middle of the tap box. We are at that 61.8% fib level. So can we bounce back up? We're still a tiny bit oversold on Bitcoin, but 24,000 is now resistance. And in order to have anything meaningful happen, we got to get back above 24,000. And then we're going to have one heck of a time getting above 28,000 because of how long that acted as support. It was support for so long. It's going to be significant resistance to get back above it. But at least we held the 20,000 level when it tested below it. But hopefully we get back above 24,000 and can consolidate a bit and then maybe take a run at regaining 28,000. But right now, just be happy that we held 20,000 and it didn't get uglier than it could have with the move back to the upside. But 24,000 is your first resistance. We could break above that in a relatively short period of time because we went right through it so fast. Basically 2 trading days, we broke from 28,000 all the way down to almost 20,000. So there isn't a lot of resistance getting back above 24,000. It's 28,000 where all the significant resistance is going to be on Bitcoin. So we'll see how that plays out. And then looking at the EWA, and I know some of you have been asking, why are we showing the EWA instead of the XJO on Australia? Because it's more liquid, it's more tradable. And so we're showing that at your request. And you can see here, we're kind of bunching up a little bit, but the fact that we labeled to a 3, a little bit of a move higher there with the gap up, but it's an ETF, it's an international ETF, so we don't pay quite as much attention to the gaps there as we do in the US markets. But we are starting to get, that's pretty decent separation between the 10 and the 50-day moving average. You can see that it doesn't separate a whole lot very often on the Aussie market. So that's pretty good separation there. So you would think that we're likely to get a follow through on the bounce here. Maybe we just go up and label this 4, but it does seem like the Aussie market is more lining up for a continuation of the bounce than any of the other markets. So if you're looking for an international market that may have some follow through to the upside, that's one to take a shot at and see how that plays out. Canada, EWC, gapped up today again. All the markets gapped up. So the fact that it's an international ETF, as I just said with Australia, you don't look at it like you would with the UTF, but because an ETF, you wouldn't look at it like you do the SPY and the diamonds. But move back up, still significantly oversold. We're still a bit a ways from that 10-day moving average, awfully vertical on this move down. So perhaps, at least internationally, the bounce has some legs here. You can see pretty good separation here between the 10 and the 50-day moving average. And note, last time that happened, came back and touched the 50-day moving average, got above it to the upside, came back down and hit the 50-day moving average, got above it to the upside, came down and hit the 50-day moving average, got below it, came back. And you get the picture on why I bring up the separation between the 10 and the 50-day moving averages, because it works and it happens. So perhaps Canada has a little bit more bounce to it as well. Is that an indication that the US is going to follow through as well? We don't quite have as clear a picture on the US market as we do on some of these international markets, which is interesting. So looking at India, the INDA, pretty nice little bounce there, but we did hit the wave 5 tap box, just smack on again. So there's Elliott wave calling the move. I had a 38.2% wave 4 correction. You're expecting a 61.8% extension. It's exactly what we got. And so here we are right in the wave 5, pretty nice bounce, a little doji there, and pretty darn close to the 10-day moving average, and not quite the separation between the 10 and the 50. A little bit, but not quite the same amount. So India, where the other markets look like, hey, they're set up, and it looks like we could get a little further bounce. India looks like, it could potentially roll over from here and look for an extended wave 5 because we're so close to that 10-day moving average. And then EWG for Germany. See how that takes a look, looks with the German market, and consolidating here, kind of similar to what was going on with Australia, where we had a 3 here instead of a 5. So we're in a wave 3 that's consolidating a bit, and we're a little bit oversold here from the 10-day moving average, not super significant, but pretty decent separation from the 10 and the 50. And you can see now in Germany, we got good separation. It didn't touch the 50-day moving average, came back down, and then the second time it did. And now we're starting to separate again, but we're kind of earlier in this separation. So whereas Australia looks like maybe a little bit more balanced with this wave 3 into possibly labeling a wave 4, Germany could roll over and extend this move lower in the wave 3, kind of the way India could turn and roll and move lower as well. So whereas the US markets, except for the Qs, or let's just call it the S&P and the Dow, are pretty much in lockstep, the international markets are showing slightly different patterns depending on what you might be interested in trading there on the international markets. All right, so any other markets you want to look at, we'll open that up to the Q&A. I'm going to go back and show you a case study that we recently closed for our alert subscribers. And if you're wondering the difference between the alert service and what we do here at TradeFinder is TradeFinder, we look for case study considerations, and then you're on your own. Whatever you do with it, whether you get in, whether you follow it along with it, stay in, when you get out, all that kind of stuff is completely up to you. But we do have an alert service for our subscribers at EWOtrader.com where we enter it, any adjustments, we show you the adjustment process, and then we also send you when we're getting out. So you receive alerts on entries, any adjustments and exits. And here we had a time strategy. So that's our AI-based strategy on Netflix. And so you can see the entry here where we gap down, and there's the stair steps with where the stock can move, gap down on that earnings report. As you know, they talked about how they've got so many people sharing accounts that they're going to start coming after that. And so then we made an adjustment here where we closed out the short put, added a long put, or excuse me, added a new put shorter, creating a bearish spread. And that worked out really well. And as Netflix turned and moved back down after hitting the 200 level, that entire spread moved in the money. So the original position was in a loss, but the adjustment turned it into a 25+% gain. And you can see how it rocketed back to the upside as the adjustment was spot on with what was going on in the market. So I share that with you because I do like doing adjustments when the pattern warrants. I'm not a fan of, if you're in a losing position and you hit X percentage loss, just to walk away from it and take the loss. If the pattern is still showing you something that you could take advantage of, like a massive resistance area where you could look for the stock to come up, hit the resistance and move back down, why not take advantage of that? Well, we did, and we turned a losing position into a profitable one. And so, adjustments are a big part of what we do at Elliott with options, as long as there's a viable pattern. If there's no pattern, then you take the loss and you move on. But if you're in a losing position, but you have a viable pattern, why walk away from it? That makes no sense to me. I just don't get that with those hard, fast systems. To me, it's a death of 1,000 cuts type of system when you hit X percentage loss and you walk away and you move on to something else. Trust the patterns. Get good at your technical analysis, whether it's Elliott Wave or something else. Get good at your patterns, trust your patterns, and trade according to that belief. And more often than not, if you have a viable pattern, it'll play out for you. Maybe you have to be a little patient, but that's what we do, and it works really well. All right, so looking at some previous case study considerations that we've had on TradeFinder, obviously, if there's a few that are still open, they haven't been closed out, so they haven't hit our target yet. They're not really cooperating, so let's take a look and see where they stand. So we looked at Reliance Steel back on May 3rd, and here's where we are now. So we came down to 61.8% wave 4. We've had a little bit of a bounce Friday and today. Can it continue up here? I think a lot's going to have to do with what that dollar does. As far as what happens with the metals. I imagine some of you are going to ask about gold and silver, so I'll just wait until the Q&A comes in to go ahead and show those. But we have some resistance here at 180 that RS needs to get above. But you got to hang in there when you're at a 61.8% wave 4 correction. That's just classic Elliott wave. Now, if it breaks that, that's a different story. But as long as it's holding that, I think giving it a chance makes a lot of sense. We looked at HZO back on May 17th, and we're coming down here and kind of not with the market bounce today on HCO. So we're getting awfully close to this previous wave 5. We had a 50% wave 4. So if we break that, we're going to go to 100% extension. So if we break this level here, if you break this low from April 27th, then you would want to switch this to a bearish position and take that move down to the 100% extension. But perhaps we're just coming down to test it again. You look at the moving averages, we're a little bit oversold on the low, but the key is going to be what happens when we get down to this low here of the 27th of April. It can bounce from here at any time. Perhaps it's just a test. We're building in a triple bottom here. You can see the lows. Boom, boom, boom. My mentor that I learned an awful lot from in options looked at a pattern like this and would say the third time's the charm. So when you're testing a level for the third time, in other words, on this third test, if we bounce, then he felt, and his experience showed him that that bounce would continue. You'd get a continued move to the upside. But on the third attempt, you break this low, then you're going lower. So for what it's worth, based on who I learned from, you keep a really close eye on how this handles this area here from the 27th, and that determines what you do from there. I thought I would just go ahead and share that information with you. Mosaic, we looked at that one on May 24th. And again, at a 61.8% wave 4, a little bit of a bounce today. At least it wasn't a gap. A doji. So we have a doji right down here, right around. We've got basically back-to-back dojis, Friday and today. And that makes you think with the dojis sitting down here, right at this wave 4, right at a 61.8%, perhaps we're ready to take off and run to the upside on Mosaic. Doesn't have to mean that. We could break below there, and then that means you're coming down to 40. But something's getting ready to happen. So keep a close eye on this one. If we continue to bounce here, we probably have something to the upside. But if these two dojis, lots of indecision right here at this fib level, if it breaks that, we're going to hit 40 in a very short period of time. So that gives you an idea of what to do there. Rio Tinto, we looked at that on June 7th. It was a little bit overbought with that move there. As you can see, we had the positive 1030 crossover and back down. So the vertical move would expect it to come down. Wanted to see if this doji would hold here. It didn't. So now we're right back in this area of 65. So can we hold that? So kind of a similar thing here. We're oversold right here at 65. If we bounce, then we're at least going back to the 10-day moving average. So we could have a decent bounce. We had a very vertical move lower. We're oversold. So we could bounce all the way back up to the 50-day moving average or higher. However, if we break this level, so these are really cut and dry. So hopefully you're taking some notes here. If you're live streaming, here's some, some pretty good levels that you can watch here on these potential trades, because if we break 65, it goes to 60 in a very short period of time. And that's because the move from 60 to 65 before really didn't have a whole lot of back and forth to it. Pretty much a 45-degree angle move. So if we can't hold 65, you're going to 60 quickly. So if you're on your toes, and some of these, if they break these levels, you can flip them and make money to the downside, or perhaps they do bounce and you get more out of the move to the upside. But right now we're oversold. So I don't think we break 65 immediately. We're just too oversold. If we tried to break it now, I don't think it holds. So maybe just some consolidation here, let the 10-day moving average catch up, or maybe we bounce back to the upside. Maybe the dollar gives us a break on some of these metals with a movement to the downside out of that triangle. See how that plays out. That's going to matter as well. And then OLLI, which we did send this out as an alert to our alert subscribers, has performed really well. It's profitable. We looked at that last week, and you can see nice move to the upside from last week. So nicely profitable there. Again, we were trading at 54.09, and we got as high as 60. So 5 points from where we looked at it last week. Kind of getting a little vertical here, though, which is a little nerve-wracking. So I don't know how much longer you want to stay here with the vertical nature of this move. The other thing is we come back over here, and you can see this gap right there. And you look at the low here from the 2nd of December. The low was 60.68. The high today, 60.63. 5 cents away from filling that gap. So if we fill that gap and we're overbought in this scenario, maybe it needs to rest. If you look at the DMI looks pretty darn strong. The positive directional indicator is still going up, the negative still going down. So it does look like we're going to come up and hit this target here on the tap box there around 67. The key is just, does it need to rest a little bit first? Or does it power through and go? Does it have enough to break above this little bit of resistance here and go, considering it's just slightly overbought? Or you could just take the gain and go on. It's almost a 10% gain. It's right at it. That's what we usually look at. A 10% move out of the stocks, what I'm trying to say, giving you a pretty nice gain. So when we're on our directional patterns, we're looking for a 10% move out of there. We're kind of right there. So if you want to just go ahead and take your gain and move on, it'd be hard to fault you on that one as well. So that's our recent case study considerations that we have that would be considered open. If you wanted to close Ollie, you could do that. For now, we'll just leave it open and see what happens in tomorrow's trade. Perhaps you initiate a closing position there tomorrow. But let's go ahead and see if we can find a case study consideration for tonight. If you're new to this software program, it's called Profit Source. You can find it at hubb.com. To me, it's the best Elliott software program that exists. I've tried all the ones that I know to exist, and it's programmed directly from Ralph Nelson Elliott's algorithm. It's nobody's adaptation. I don't want to mention names of other programs that are out there. Just don't think that's fair, but there's a lot of Elliott software programs out there that are individuals' adaptations of it. But I don't know. I think if you're going to follow the system, you want to follow the system that the guy that created it originally wrote. I don't know. I don't consider myself to be smarter than him, so I don't create any sort of adaptations to it. I just follow along with the actual programming that he wrote. So if we look at our bullish impulse stocks, and you can see this is EWO. If you're an Elliott Options Alert subscriber and you have this software program, you get these additional searches here that are, and the EWO ones are mine. They're included in there, so you can see what I'm looking at every day. And then there's some other really neat things in there to help you create your own searches. And if you have your own indicators you like, you can create a search out of those. The pre-computed ones are instantaneous. You don't have to run them and wait for them to run. They're right there. So this VEEV, I've looked at this before, and there's been some fantastic patterns with it in the past. The problem has always been there's not a lot of liquidity in the options. So I've dealt with some really good patterns, tried to put trades on it, but just couldn't find anything that had enough liquidity in it to do so. And so from that, stayed away from it. But you can see we're there's a zigzag pattern right there is what we're in, completing that wave 5 low. So right at a 50% wave 4 correction. And look at that, the 100% extension takes you right to resistance. So that looks pretty good. But I just think if we look at the options, I don't think we're going to find too much liquidity there. And we can take a look at it and see what it looks like. But see on VEV. Well, not quite as bad as it's been in the past. Spreads aren't that separated, so I might have to take that back. Maybe more people are looking at this now. I just haven't been able to find a good trade on it in the past, but those are decently tight spreads. Look at this. See, we've been teaching people the value of trading out of the money options because of the speed at which the options move, the delta and the gamma effect. You allow the delta to move faster when you're right on direction, so it accelerates your profits. And it used to be that everybody went after the at the money options, and when you come down here and you look at these out of the money options, the spreads are wider, and that's so aggravating. But people are paying attention. People are figuring it out. I think we've educated an awful lot of people. We've been doing this for a very long time, and people are figuring out that out of the money options are the way to go, not in the money options, which is how it used to be years ago. Everybody wanted to trade in the money options because they're like, oh, you're getting close to dollar for dollar on the movement of the stock, but you get no acceleration. The delta curve levels off. But when you start down here, you get the acceleration, so you make money faster. And then are cheaper, so you can buy more contracts, and that gives you a higher net delta, all those things. But people are figuring it out, and you can see that the spreads are a bit wider down there, wider than the at the money options, which is really aggravating. But that let's go back, and I'm just going to have to take back what I said. There may not be a trade there. It looks like there is. You've got a great zigzag pattern here, where in a move from the wave 5 back up towards the 4, it was a 71% wave 5 extension. So we could go all the way back to the previous 4, but we wouldn't be looking for that. We'd be just looking for this 100% extension line around 217. We're getting some pretty good separation between the two directional indicators. That ADX is trying to curl up. I would have preferred it come down below 20 before it turned back to the upside, but this works sometimes as well. I prefer when you have a change like this, when you're switching from a downward direction to an upward direction, that you allow that ADX to make it below 20, because then when you break back above 20, it's like you're resetting and it's a new start. Didn't quite make it back that far, but it could still work, and it could still play out that zigzag pattern there. And you can see we have a positive cross between the 10 and the 30. We're not that overbought. Got a little bit overbought on the high, so we closed near the low of the day, but that doesn't look too bad. And pretty good money flow there. CCI looking good. The one that I was saying that we probably don't want to look at, that one may end up being the winner. Ollie we already have, so it's nice to know that that's still in the search. So might give you a little bit of confidence to hang in there a little bit longer rather than take the gain. But again, it's moved almost $6 since last week, so keep that in your mix. We won't look at that one again. And then FCN, which is FDI Consulting, nice upward day today. Let's see what that DMI looks like. Good volume. You want to see that kind of volume where it's not just overwhelmingly positive, but good, solid, above average volume. Nice movement there in the CCI, the ADX. Now this one I like better because it came below 20 and is picking up, but it hasn't triggered yet. So this one is not ready. This one would go on a watch list for me. So I would look at that and say, okay, keep an eye on FCN, put that on the watch list, and see if that ADX does break above 20. Good separation between the two directional indicators, but for me, I couldn't put that one on now until you see that ADX actually break above there. Our subscribers have seen this enough times to know that when the ADX is moving up, everything looks like it's setting up, and you could be thinking, just look at that move, another day or two, and it'll break above there. Well, sometimes that ADX comes up to 20 and just rolls over. So skip that. So we'll go ahead and look at VEEV as our case study for today. And obviously it would be helpful if this market rally continues a bit. Perhaps we get just a little bit of a move down to fill the gap if the market is going to stay strong, or maybe we only get another day or two follow through and then we roll over and come down and fill that gap that we just created today. We'll see. If you're curious, right now, it looks like the futures are down at the moment. So that's not, the futures are down 21 points. So that's not too indicative of a continued move higher, but we'll see how it plays out. But that zigzag pattern looks pretty darn good in VEEV. All right. So Zach, I'll bring it back to you and do some Q&A.
Very well. Sounds great. Thanks for that presentation, Rob. Per usual, we have tons of great questions and comments coming in from both Zoom, YouTube, and our other streaming platforms. Some were duplicates actually as well. So we'll start out with this first one. George from Zoom would like to look at K, and Manuel would also like to look at K. Was wondering if there might be a triangle on the monthly.
On the monthly, whoo, okay. Well, there's K. So Kellogg, and we were in SJM for a while. Food kind of got out of favor and then came back into favor. So is that happening again? I don't know if Kellogg's had an earnings report today, but it was certainly a big gap up, and it filled the gap basically is what happened. So we opened on the high, closed on the low. That's not normally very positive price action, but the fact that, look at that volume. Is that an earnings report? Somebody know what happened with Kellogg today? It's not one of the stocks that I typically follow. So that's pretty massive volume there. So is there chatter of a buyout or something? I was just curious as to what would cause that kind of volume. Doesn't even seem like an earnings report would do that much.
It was a split.
Oh, split announcement. Okay. Well, that makes sense then. All right. So let it calm down a little bit, and then perhaps take a look at movement back to the upside. Used to trade a lot of splits. I did only trading splits for a time in my trading career where you learn the different aspects of it after the announcement, then it calms down, and then you kind of run into the split. Then you get the actual split. Usually there's some selling. Stock usually pulls back after the actual split, kind of like what we're going through with Amazon. And then it turns and runs back up again after the split. So the fact that it didn't hold this move means maybe there's room to capture that continued move back to the upside. You got a 61.8% wave 4. So it does look like things are set up for Kellogg to at least creep back to the upside. See what happened here. This is why I hate these vertical moves. Went vertically up, vertically back down. Just see examples after examples of these rules that I keep trying to share so that you incorporate those into your trading, because these things work. All right, so the question was on the monthly chart on K, if there was a triangle pattern. Was that the other part of the question, Zach?
Correct, yeah, a triangle on the monthly.
There is, but the problem with, if you were trying to trade a strangle or anything on the monthly, even if you went out and did leaps, what you're doing is the reason that we do the out of the money options on the triangles is the same thing that I was explaining to you with the delta curve. You get the acceleration, whether it breaks to the upside or the downside. So what happens is, whatever direction you break, you're getting the fastest acceleration of the delta, and the opposite side, you're going down the curve on the slower end. So you're making money faster, losing money slower on the breakout. But if you were to look at a monthly chart and do leaps, then the further out in time you go, the lower the gamma goes, and it takes all that acceleration away. It just simply doesn't work. So you would have to do a straddle if you wanted to do something way out in time, and you just have to analyze the expense of the options to see if that matters, meaning that one option would move in the money, but you still have to have a reasonably quick move because that other option is going to be losing money much faster. So very challenging to do any sort of a strangle. I'm not sure if that was the question or not, or if you were just looking at the pattern. But if you're looking at the pattern, yeah, it's definitely a symmetrical triangle with an upward breakout. We're testing the breakout right now. So we didn't really have a follow through to the breakout, but we are testing it. So perhaps that could aid into some sort of a drift back to the upside until the split date at least. So interesting.
Interesting indeed. And what's unique about that split is they're actually going into 3 separate entities or companies rather, versus just
oh, so
split.
They're breaking the company apart. Okay, I got it. Trying to create more value by doing that. Okay.
Yes, indeed. Just came through. Carol and Pete were having a conversation with Mike Wade, who said to tell you hello a bit earlier. So
please tell Mike hi back to me. Appreciate that very much.
Absolutely. So another duplicate question we have here from both Zoom and YouTube. Valicia and Wolfpack would like to look at Tesla.
Imagine that. Want to look at Tesla. Tesla's, let's get back off the monthly back to the daily, but pretty good day today on Tesla. And you have to feel, we talked about, was it last Thursday night or was it last TradeFinder where we looked at Tesla? We talked about how it really needed to hold this level of 640. Otherwise it starts to get kind of ugly. Well, it did hold it. Nice move back to the upside today, a little bit of a descending triangle. So this kind of gives you an idea. It has to follow through yet. So we can't confirm the breakout, but remember when I was talking earlier that a descending triangle doesn't necessarily mean a downside breakout. It just means a breakout. And clearly it broke to the upside today. Now, does it follow through or not? We'll find out tomorrow, but pretty nice move back to the upside in Tesla today. And if there's any sort of follow through, it should have a pretty clear run back to 800 because there's not much in the way. You can see it did it back here. Coming off the first time we were down here at 640. Then we came down and tested 640. We're bouncing again. So are we going to go back to 800? I would say that's probably pretty likely based on that move. Let's see what the volume looked like. Yeah, really solid volume there. So I think Tesla is probably going to go test that resistance again at 800, and we'll see how that plays out. That would be pretty impressive, but that looks awfully good.
Yes, indeed. And so next up, David would like to look at the weekly of TNX. I know you covered TNX earlier, but you want to look at the weekly chart real quick.
Okay. Nothing wrong with trying to get a little longer term view on interest rates. Pretty interesting. Glad you brought this up. You can see there's a zigzag right there. I don't know if that's enough of a correction to count that. Not 31%, not quite. Remember, Elliott wouldn't really like that one. You could say, well, it was a pullback. And so the next level should be 36, but we're awfully darn close there. And we're really vertical on the weekly. This could be a positive here. It's hard to imagine that interest rates back off with the Federal Reserve just embarking on a rate hike campaign. So then you would have to say, well, if interest rates come back down, because it's really important, and I talk about this a lot, to understand the relationship between the bond market and the stock market. If rates come back down, that means money is moving into the bond market because you would expect rates to go higher with the Federal Reserve raising rates, right? I mean, they're raising rates, so it's going to go up. So if it comes back down, it's money going into bonds, prices go up, yields and rates come back down, and that means money's leaving the equities market. So if we do get a pullback down in rates, it's because money's leaving the equities and going into the bonds. Otherwise, it would continue to go back to the upside. Maybe we have a little bit more. Maybe we actually hit 36 on this. Glad you asked about that. It's pretty interesting. Now, right now, and this still applies, we're a little bit overbought. See, we got overbought here and came back down to the 10-day moving average. We're there again with a bit of a quasi doji, but it's a weekly chart, so we still have time to go. I may not be a doji by the end of the week, and maybe by the end of the week we're back down to the 10-day moving average. But if that occurs, then I would say we're probably going down to fill that lower gap on the S&P and likely even moving lower. I think the best thing that could occur here as far as a signal for the equities is we kind of go in a range here, maybe even just a little bit of a drift higher, and let that 10-day moving average catch up. But if we come back down significantly, it's probably because money's leaving the equities market, and that's not bullish for the equities.
Very good. Thanks, Rob.
Really good suggestions tonight. Really cool looking charts we're looking at.
Absolutely. Yeah, I couldn't agree more. A couple requests from both YouTube and Zoom. Gustavo and Mark would like to look at USO.
Oh, USO. I'm surprised nobody's asked about gold yet. Maybe that one's on the list, but yeah, I figured oil would be coming. Oh, it is. Okay. Well, I promise everybody, I know we're getting towards time, but I won't leave without looking at gold and silver. We hit the 61% fib extension there on oil, and we've come back down. It's hard to imagine oil not going to 100, but at least we've gotten a little bit of a relief at the gas pump, 10 or 12 cents lower here in Florida, which is something when you're at $5 a gallon. But right here, we are below the 10-day moving average, and if we get a break lower than that, maybe we come back and retrace the breakout of this triangle first before oil goes back to the upside, or maybe $5 was the number. A lot of people were saying $6. Hard to imagine oil not going up in the peak driving season with the summer. But the market's always looking ahead. So perhaps the big run up was in anticipation of the driving season. And then as soon as the summer's over, nobody's going to drive anywhere. We're getting on our bicycles and we're buying electric cars. But we're back down to 85. So we're going to find out now. Inside day today, meaning that the high of the day was lower than the high on Friday, and the low was higher than the low. So we'll see if that means that something significant happens tomorrow. But the point of the triangle is right here, which means we could come back to just below 80. We're at 84, the low is 83, so we could come a little bit lower. But note that we had the 50% wave 4 correction, which normally means a 100% wave 5 extension. So this just could be some pullback from hitting that really strong 61.8% fib level. So perhaps we get a little bit more to the downside first. We're going to get that retracement to that point at some point in time. But with the inside day, something significant could happen with oil tomorrow. But really interesting looking chart. And so before you ask, Zach, I'll just go ahead and show gold and silver. So here's the GLD. And we just cannot get above 175. And that if you've heard these, it's the dollar. If the dollar breaks up, then we're probably going to break below 175. We're probably not, or excuse me, 170. We're probably not going to hold 170. We're probably coming down to 165. If the dollar breaks to the downside, then perhaps we get another run at 175 and can break above that and get something going on in gold. But it's all going to be dependent on what happens with that triangle in the dollar. So silver, looking at the SLV for silver, we're building a bit of a triangle, which is starting to look pretty attractive here. And let's see where that ADX is. It's not the greatest triangle, but it's still a triangle. Now the ADX is too high. So you're just going to have to wait and see what happens here. But a triangle with the point right there at 20, which is a key level support and resistance. We'll find out which way silver goes from here. But if it breaks to the upside, we could have something going here in silver due to the fact that we have this triangle right at that support resistance level of 20. But if it breaks to the downside, there you go. There's your target. 17.5 is probably where the SLV goes if we get a downside breakout of the triangle. So it's all going to depend on which way we go. We would not try to put a strangle on this because the ADX is too high. We just let it make its move and then try to trade the directional move after breaking out of that triangle. You got one more, Zach, or?
Yeah, we can finish off with one more. Kev has put through PDGX. I don't know if maybe mean PTGX.
PTGX is one that's giving a little bit of a bounce. We've got an adjustment on that for our alert subscribers. You can see it's based here and kind of moving back to the upside. So it does look like it wants to take a run at that 10 level. And we talked about last week how market rotation, money rotation, it looks for stuff that's underperformed. And when you have something like this that got beaten up so badly, you can make some short-term money out of this. It's back above the 10-day moving average. And we'll see if it can run back up towards that 10 level, which is where it looks like it wants to go. Let's do one more, Zach, and then we'll call it a night.
Absolutely. So let me find one more here for you. Tony would like to look at CVX from YouTube.
CVX?
CVX.
V as in Victor?
Correct.
Okay. We'll see how Chevron's doing, considering how well the oil was doing, and just in lockstep. In fact, it's hard to imagine, isn't it? Oil is elevated. Yeah, oil's pulled back a bit, but it's still at elevated levels, and so they're going to sell off on the oil companies. That seems a bit overdone to me. So we're right at the 38.2% fib level. We're oversold. I would say we probably get a short-term bounce out of Chevron, at least back towards 160, towards the 10-day moving average, but it's going to have some work to do to go any higher than that because there's some pretty good resistance there at 160. So I think you get a little bit further bounce, but it's hard to call what happens after that. The 38.2% fib level could hold. If it can get back above 60, then I think we've got a run going there. But it's interesting that it's so reactionary to the price of oil. Where oil's been, you would think that even at elevated levels, the oil's pulled back, but it's still at elevated levels. It would be good from a profitability standpoint, but that's why we look at the charts, right? So anything can happen. Thanks everybody for all of you that live stream on the various social media services. Thank you very much. Appreciate it. We're glad to have you. I hope we see you again next week. If you didn't get your question asked, apologize, but please join us again next week. Time's the most valuable asset we all have. We very much appreciate you devoting some of your valuable time to us. We hope you found this informative and educational. Have a great week.